I help people fix their credit by removing negative items from the reports.
To increase credit score, is it more effective to pay off a whole balance on a credit card or leave 10 to 20% on it?
The fact that you pay it off is not really going to help you.
How are you guys? I'm Isaac Salcido. Welcome to today's video. And today's video came out of nowhere, right? I'm here with my friend Sam. He's a credit consultant. Say hi, Sam.
Hey guys.
So today I just called him in. All of a sudden he just came from his office. We started helping this client. And as he started teaching my client, I found and learned a ton of great information. And all of a sudden I just told him, you know what, can I do a quick interview for the video? And thank you so much, man, for giving us your time. I highly appreciate that.
You got it. Hopefully we can give out some useful information.
Awesome, so let's dive in. So today I plan on asking a couple of questions and also answering some questions that people had from the internet, okay? So the first question, right, when it comes to credit, and I've heard, me being in the world of finances, that credit is the most important thing in America, you know?
Definitely.
And it is to a certain extent, right? For me, I've always paid everything cash, but then last year I wanted to buy a car and I couldn't get a loan because I had good credit, but I didn't have a lot of credit. And that's where I was like, wow, I need to do something, right? So the first question is, and this is more in the sense where do I start when it comes to building my credit? What if I already messed it up? Because some people start out there, destroy their credit. Can they fix their credit? Or what would be the process?
Yes, they can fix their credit and they can rebuild it. So, you know, most people mess up their credit in their teens, right? Their early 20s, they get a credit card, they go all crazy, and they find out they cannot pay off the debt, or they just forget. They don't have the discipline to, you know, just make those payments on time. So when someone has messed up their credit, it is going to be very hard for lenders, banks, institutions to give them a credit card, a loan. So what people can do is that they can start building positive history through secured credit cards. So, you know, you have like Discover has a good secure credit card, Capital One, your bank may have a good secure credit card. And that may be a good way. There are also some retailers that do give people with bad credit a chance, and you know, they'll give you a low amount for you to buy something. Yeah, a low balance credit card to get something on their store. So that may be a good way to do it. That's the way to start rebuilding your credit, but you can also dispute items off your report if there's something that is not being reported correctly. This is what a lot of people don't know. You can do this by leveraging the Fair Credit Reporting Act. And that's basically what I do. I help people fix their credit by leveraging the law in their favor.
Perfect. You said something really key right now. Secured credit card. So what does that mean?
Secured credit card, it's a credit card a bank gives you in exchange for sort of a security deposit, right? So I'm a bank. I see that you have bad credit history, so I don't really want to take a risk on giving you a credit card. So what they do is that they will ask for a certain amount, typically it's like $300, and they'll give you a credit card for that amount. What happens is that you start using that credit card, you start paying it on time, and after a certain period of time, each bank is different, they'll give you your security deposit back, and then they'll issue an actual credit card with a balance, so you can, you know, start using it.
For sure. Awesome. Thank you for answering that question.
You got it.
And me, actually, that was the first credit card I had, man, a secure credit card.
Oh yeah, that's.
When I started, I used to work at a bank in Arizona.
Okay.
And it was really interesting, but I wanted you to explain it.
Awesome.
Because you did it better.
Well, you know it works. It helps you out of building your credit, definitely.
It definitely did. Question number 4, right? What do credit bureaus do? How many are they? 3?
There are 3 credit bureaus. You have the 3 consumer ones, Experian, Equifax, and TransUnion. Okay. And as to what they do, okay, so let's say that you come to me and you ask me, hey Sam, can I borrow $1,000? What if I don't know you? Are you gonna pay me back? I don't know these things. So the credit bureaus, they're places where information is stored about someone's financial life,
Okay.
their credit life. So why do they exist? Why do companies run your credit before they approve you for a loan, for a mortgage? Is because they want to know your reputation when it comes to paying money back.
Perfect.
So that's why they exist.
Okay. And sometimes people, and when it comes to finances, sometimes people say, you know what, it's too much numbers, it's too much information. To give it a little pause to this educational video, I always like to throw in a fun fact. So a fun fact about credit, what could you tell us about?
Well, just quick fact, a lot of people know that one of the ways the bureaus make money, and it's maybe controversial, I mean, in the last few years it has been that way, but it's just, what it is, and it's completely legal. The bureaus make money in part by selling your information to companies who want to, offer their products to the people who actually need them, right? But what a lot of people don't know is that companies, banks, actually pay the bureaus to report your information to them. So and that's a little crazy, but yeah, that's the way it works.
That's the system, right?
Yeah, they don't buy your information. They get paid to get your information.
Wow.
And then get paid to sell it back.
Could we create another bureau of information?
That'd be great, guys. Just put in in the comments your name, address, social security number.
We're gonna create another bureau of information. Okay, awesome, man. Thank you so much for that information. Let me jump into the questions people asked. Right. So Haman, great friend of mine. How are you, Haman? He asked, to increase credit score, is it more effective to pay off a whole balance on a credit card or leave 10 to 20% on it to increase credit score?
This is one of those facts that gets thrown around a lot in the credit world on what's better, to leave a balance, to pay it off. Talking about percentages, in my experience, I help people fix their credit. I see a lot of credit profiles, and I get to see the impact that certain balances have on a score, on the FICO score. And what I've seen is that just keeping the balance under 30% is all that matters. Doesn't really matter that much if you have like 1% left or 5%, or if it's completely paid off. As long as it's under 30%, you should be good.
Perfect. So under 30%?
Under 30% is a magic number.
Perfect. Awesome. Second question, Lou Pelaez. Hope you're well. Pay credit cards down first or pay off charge-offs debt first?
Okay.
Which option will increase score faster? So hopefully you understood that question.
I understood, and it's a very good question it doesn't have one right answer. So just in case people are not familiar, a charge-off credit card is, a credit card where you didn't pay off the balance and the bank charged it off and they closed it. And well, it affects your credit. But what will increase your score faster? It really depends on when the charge-off happened. When you have a late payment, when you have a charge-off, when you have anything negative on your report, it's always going to affect you more the more recent it is. If the charge-off happened 5 years ago, it's not going to affect you as much as if it had happened yesterday. So if it's an old charge-off, I would say just you said pay off balances. I would just say keep it under 30%. You don't necessarily have to pay it off. But if it's recent, the fact that you pay it off is not really going to help you that much. Actually, it's not going to do a lot for you, because you may pay that credit card off, but it was closed as a charge-off, and if it was closed, it will reflect that you had late payments, because if they closed it, that means that you didn't pay for a while. So what's really hurting you a lot is going to be the late payments. So there's not going to be a lot that you can do on that other than waiting the 7 years for it to come off, or have a credit repair specialist remove it.
Perfect. Now, so let me reiterate to see if I understood. If the charge-off is 4 years ago and she also has credit card debt, she might as well just focus on the credit card debt to get, for it to rate, for the credit card score to rise?
Yeah. Again, it will start hurting you less and less as time goes by, but it will always have an impact on your final score. So I would just focus on what you can control and just keep the debt below 30%.
Okay, perfect. The last question is, what is better when account is in collection, settle an account, or make payment arrangements? Okay, so what I think this person is asking is, when an account is in collections, what's better? Should they do a payment arrangements or pay it off?
Okay, I really like this question because a lot of my clients deal with this and they wish they would have contacted me before they paid off the collection companies. So for starters, like if I'm gonna work with someone, they have collection accounts, I can remove the collections of the report and that's it, right? But if you do have a collection account that you wanna pay off, make sure that when you pay it off, that you get in writing a guarantee that it will be removed from the bureaus. Because even if you pay it off, it will still show on your report and it will still affect your score. Doesn't matter if it's paid off. So pay it off, but before you put a cent in their bank accounts, get something in writing that states that the account will be removed from the bureau.
So guys, to finish off, right? Sam, so what is it that you do for clients?
Very simply put, I help people fix their credit by removing negative items from the reports. What items are these? Credit cards, loans, mortgage accounts, collections, repos, foreclosures, anything that may be affecting your FICO score negatively, I can remove it off your report in 30 to 60, 90 days.
Guys, if there's any questions or concerns, please connect with us. I'm gonna put my email and my information below, right? Like and subscribe, have a phenomenal day.